Welcome to Training the Newbie, the podcast where we explore what happens when two worlds collide. I'm your host, Bill, and in this series, I'm taking on a bold challenge, training someone from the halls of academia, a professor with a rich background in leadership and entrepreneurship, to navigate the fast-paced, high-stakes world of Forex trading. It's a journey of transformation, uncertainty and insight, where theory meets practice and strategy meets screen time. Whether you're a teacher, an artist, a coder, or just someone who's curious about making your money work smarter, this show is for you. Because if a seasoned academic can step into the Forex arena and learn to read the markets like a pro, why not you? Let's dive in.
Learn how to trade?
Great, yeah.
All right, let me show you something. Here, I'll just share the screen and then you can see what I'm jabbering about. I'd like to keep this class really loose and free-flowing. I didn't make a canvas shell, but I'm going to record all these and I'll share you the links to those if there's something you want to go back. And I think we'll keep them to, I don't know, however long it takes to get through this, but I think I can get through most of this in under an hour.
Okay.
And then we can just schedule the sessions whenever you want, whatever's convenient for you. If this time is good for you, this time is good for me. So we could do them regular at this time if that's what you want to do.
Yeah, I think probably making it regular is smart.
All right, so let's set them for Mondays at 1:30. How's that sound?
Should be good.
Okay. Here's where I want to start. So the first thing that I usually do with people is to talk about goals and expectations, and that's basically your goals and expectations. What do you want to get out of this? What do you expect to get out of it? Et cetera, et cetera. And then we'll talk about that a little bit. So what do you think?
I think there's a couple of dimensions that are operating. One is just frameworks and system models for understanding complex things. And I think trading is, and people's attempts to come up with trading strategies is one way of modeling a complex world. And so I think there's, on one level, I'm just curious to observe and learn another way of doing that and like what signals matter and how to make decisions under uncertainty and stress and whatnot. There's actually a really good Freakonomics podcast. I haven't for a long time, but it popped up and it was a throwback one from several years ago that had a woman who's a PhD in social psychology that also is a writer for the New Yorker, New York Magazine, something like that. And she went on this journey to learn poker. And the idea was just to write a book about it because a lot of her research is on deception and decision-making under uncertainty. And she was talking about how poker is a really great model for these things. And before we were going to get talking here, I was just thinking about that. Like poker and also FX trading, Forex trading is it's the same thing. There's uncertainty going on. You're trying to figure out what some signals are, make decisions in really tight constraints. And that tells you something about yourself and about the world. So I think that'd be fun. On kind of the financial side, if there was a way to create a system that I was decent enough at that could reasonably supplement, not totally replace maybe until I get to God level, whatever that is, but to start supplementing, that would be great. To be able to generate a little bit more income on the side, that'd be awesome. So I think there's probably those two dimensions. One, just a curiosity learning one, and one, a little bit of side hustle, one of the portfolio side hustles.
Okay. All right. You have very realistic expectations, which is awesome because usually people are like, I want to be able to buy a
Maserati by next Tuesday.
That is not going to happen.
What if I put it all on red? Come on, be honest
exactly.
with me.
Now you sound like my son, who's really in poker too. So a couple of just comments. Can you just mention a little bit about your background? And it's mostly just for the podcast so that when I introduce you, I can represent you properly. Just tell me a little bit about how you got where you are, what your education is, what your current job is, that kind of stuff.
My kind of academic training is economics, biology, mental health counseling, and social science research. So I've had a quite broad spectrum of training. That's always been the types of questions and problems that I'm interested in, ones that are interdisciplinary at the edges of things. I've had careers as a psychotherapist, as a policy researcher, and for the last 12 years, a professor at the University of Chicago, teaching entrepreneurship and innovation and leadership. I've redesigned, as part of that, the career services, redesigned the leadership programs at the public policy school. I've taught all over the world, in the Middle East and Asia and Europe, and have really enjoyed all of that. It's brought me in touch with a lot of students from a lot of different backgrounds who have access to a lot of problems, and those are the things that I'm really get stoked by and really motivated to work on. So a lot of the coursework now is geared towards social entrepreneurship or public sector innovation, trying to help governments be more effective. And then one of the kind of outputs of that has been some research and insights around the job market and job mobility and decision making. And so I've decided, after a lot of fits and starts, pre-COVID, post-COVID, to now starting a currently tiny tech company called Rolodeck, which is building a networking app that helps people improve their decision making and give them more context for their careers. So really figure out, what should I do with my life and how do I decide? I've built the whole thing myself. I've done all the video production, sound mixing for the course, built the front end, built the back end, built a couple different apps that sync up to it, and all the data orchestration. It's been so much fun, a lot of work, a lot of different hats, kind of continuing the theme. And I'm hoping it can be something. Among the other side hustles that I have, along with Forex trading, will be run a tech company.
We sound like kindred spirits. I think you're going to enjoy this. High IQ individuals gravitate this to like flies to a bug zapper.
Oh, no.
Just be aware of that. One of the things I always tell people who are trying to learn this is intelligence is a little bit of a handicap. And I suffer from it just like everybody else does. It's just because we like to solve puzzles. Sometimes it leads us down a bunch of rat holes of non-productivity, which translates in trading into losing money. Hopefully, I will help you not make those mistakes. I learned through trial and error over about 30 years. We'll hit a little bit on how I got into this on my journey. I was a techie, right? Engineer, electronics, hardware, not software. I learned software because I had to get the hardware to do what I wanted it to do. And I learned at the assembler level, the lowest level of software coding that you can start at.
Close to the metal, right? As they say.
Yes, exactly. And look, hindsight being 2020, I think that gave me a huge edge as far as learning how to develop software, because I understood what was happening under the hood in the engine and why things happened the way they did. But anyway, my financial market, I literally knew nothing about business and the financial world up until I was about 12 years into my career. And two things happened. I got married, and my mother-in-law was a retired broker slash trader from, I believe it was Morgan Stanley. And she had built up portfolios for her kids, making them all, basically leaving them a legacy that made them all quite wealthy.
Yeah.
And that, combined with then going back to business school and always wanting to understand the business side of things, got me interested in the financial markets. Like I always tell this story, one of my first experiences was a long time ago. I used to work for a company called Prime Computer, got up the food chain pretty quickly. And one time my boss, I was having a review with him, and as part of my review, he gave me a whole bunch of options in the company. I remember my reaction was, I didn't know what an option was. So I was like, oh, so I'm not going to get this big raise. You're just giving me this piece of paper. I had to go and do some research. Back then, you had to go to the library to figure out what a stock option was. And then when I realized the value of it, I was like, oh, this is way cool. That's got me started. That's what got me curious, and I started. So let's talk a little bit about the market. So I started pretty much where everybody else starts, which is the stock market, right? What stocks should I buy? How do you make money investing, et cetera? And this is like the 80s, right? The predominant strategy back then was buy and hold till you're old.
Buy Berkshire.
Yeah, exactly. Blue chip stocks basically mimicked what my mother-in-law showed me or taught me, which is look for high value companies and just buy and forget about it. The thing. So her portfolio was companies like McDonald's, all the big food companies, a couple of the energy companies. But that was how I learned. So then as I learned more, I realized I learned about diversification, and then I stumbled upon mutual funds. Okay, that's probably a good way to do it. Then I moved on to options as I got a little more sophisticated in my knowledge. Options were interesting because they allowed you to manage the risk a bit more, but I don't know if you've ever played with options or not. The strategies and the prep work is what I call it for that. I just thought the math was just too much. You know what I mean? You've got all these different straddling strategies.
Condors and
Yeah, all that crap. I got a book somewhere on all that stuff. And I'm going to talk about books here in a second. But yeah, there's, I'd say, a half dozen of really popular strategies. They work really well, most of them. I sold what are called covered calls for a really long time and made money doing that. But it just was, I wanted something a little more fast paced. And I'm a little bit lazy. There was a lot of work involved in picking the correct options and making money on them. So I was looking for something else. And then I moved on to futures. At the point I hit options and the point I hit futures, I started to seek out mentors because there were a lot of folks out there that were teaching people how to do these things. So there was a guy by the name of John Carter who's still around, who I believe still has a trading company that I don't know if he still teaches people, but I know he still exists. The thing that happened as I progressed these different instruments was when you start with stocks, if you're going to be speculating and trading frequently, you need a lot of money to trade in stocks. I
Mhm.
forget what the pattern day trading rule was, but I think you needed at least 10 grand in your account. And way back when, I didn't have any money, so that was a lot of money to me to tie up in something that I could potentially lose. As I moved down that little ladder that you're looking at, options, I could do more with less, and futures, the same thing. Futures are basically like options, but they move in very precise increments. It's called a tick. It actually started out of the rice trade. It was agricultural in its inception, invented candlestick charts because they were tracking
Really?
the price of rice in the markets, the open, the close, the high and the low of price on a daily basis. And that's how they calculated their buy and sell prices for that.
Hmm.
So if you dig into the futures market, you're going to find all of the Forex pairs that we're trading. You're going to find the indexes. There's futures indexes. You're going to find commodities, the stuff you always hear in the movies, like pork bellies and corn and all that kind of stuff. And then precious
Yeah.
metals like gold, silver, etc. I did that for a really long time, probably 12 years. Did really good in that. And I really got serious about this after I was thinking about retiring because I was looking for something else to do. And then as I started to teach, people would find out that I was into this, especially my students, and they were always asking me, how do you do it? And then I would start to explain to them about futures, and students, they don't have any money, right? So they can't, maybe a few of them could that come from wealthy families or whatever, but nobody could really do it. And then I discovered the Forex market, and the barrier to entry financially is much lower. You can open a Forex account with 50 bucks and learn how to trade, right? So that's how I got into that. And I've been in there ever since. It appears to be the bleeding edge of trading. There's these other weird derivatives that come out here and there, and then there's cryptocurrency and stuff. But I stay away from that stuff because a lot of it is unregulated and you can get in a lot of trouble in a very short period of time. That was how I got into the Forex market. And along the way, I did have a couple of mentors here and there, but they got me to the next phase. But I really got to where I am now through my own efforts, blending my technical knowledge, my business knowledge, and my ability to code to craft together something that works really well now. Back to your goals and expectations. You can make a lot of money doing this, but you're not going to do it when you first start. There is definitely a process that I've seen people go through. You start out, you lose money because it's like learning to ride a bike or drive a car or fly a plane. You're going to make a lot of mistakes when you start, so you have to build that into your expectations. The time frame that I've seen people get it, anywhere from 3 or 4 months to some people took years before they finally overcame their own personal hurdles. Most of those, and you'll like this since you were a therapist at one point in your life, most of the hurdles that people, I would say, run into, if I had to break it up into percentages, 3% of the hurdle is learning how to trade. 97% of the hurdle is learning how to manage your personal psychology. Okay. That torpedoes more people than anything else. It's just, I've struggled with it. Everybody that I've ever taught struggled with it. Interestingly enough, Dave, who's been trading now with me for a little over a year, is starting to do well. So you go through this, lose, then you go through this sort of treading water, make a little money, losing money, but you're not like losing your whole thing, right? You're just keeping your head up. You're not drowning. And then all of a sudden, one day it all clicks. And that's when you start to take off. And then when you get to that third phase, that's really where sky's the limit. I have a little training account that I keep anywhere from $5,000 to $10,000 in, and I can pull a couple $100 a day out of that account easy. I also have the company with the hedge fund now. We're talking substantially more money. I trade a little bit different in there, so I do less frequent trades, but they're more profitable. But that I have to share with my investors because that allows me for a higher potential of profitability. So let me talk a little bit about books, because I think I'm going to tell you about 3 books. This is the first one. I'm going to put the link in the chat here for you. This is called The Technical Analysis of Stock Trends. This is the Technical Analysis Bible, is what I would call this. This book has been around for quite some time. It's not a light read, but I use it more like as a reference because a lot of times I'm designing different things, and there's a particular method of technical analysis that I may want to explore, and this book is really good for that. How familiar are you with technical analysis? I should probably define that first.
I know conceptually what it is, about looking at quantitative metrics and focusing on second order analyses in order to determine patterns to then make trades, right? Rather than make it on like value.
So
in contrast to value-based trading.
Exactly. There's 2 religions in trading. There's investing, and then there's what I call trading. In investing, you're looking for value in companies. You're looking to get in when you believe they're undervalued and that they will grow. So the value of the stock price or whatever it is that you're investing in will grow as well. Whereas with trading, you're looking for some sort of visual indicator that you can create on your chart to give you a quick interpretation of what you believe is going on at any given point in time. Okay. So this whole field of technical analysis grew out of it. But if you dig into it, it intimidates a lot of people. But if you look at the actual formulas and math and code that's used to display these indicators on your chart, you're not talking anything harder than 4th or 5th grade math. It's averages, it's percentages, it's a few little calculations. There's not a whole lot to it, so don't let it intimidate you. But the book that I gave you, that's a great desk reference. If you run across something, you go, oh, what's that? It's probably in the book. Okay. The other book that I would recommend is this one here, and let me call up the link for it, Amazon, so that I can give it to you as well. This one is called Candlestick Charting Techniques. And this is by Steve Nielsen is the author. I'm going to drop the link to that in the chat. So, like I said, this visual study of what's going on with price started in ancient Japan in the rice trade. That whole story is pretty fascinating too. There's a lot of, it could be its own Game of Thrones series. Yeah.
It's like Game of Thrones times The Big Short.
Exactly. It's all these different emperors were all competing with each other and using the markets to get rich and powerful, and it's pretty cool. So anyway, this book is all about, there's a whole, what do you want to call it, cult of charting, and this book is a kind of a dictionary of all of the different candlestick patterns that exist and how you would
there's more than one.
There's probably 40 or 50 of them that are very frequently used, but I think there's hundreds of them that exist. Understanding how basic Candlestick chart works is one of the fundamental skills that I will teach you how to do. Not
Okay.
today, because that's a whole lesson in itself, but just be
Right.
aware that
It's
book
coming.
that book is very helpful. So that's what that book's all about. Then the last book that I'm going to bring up is called Trading in the Zone. And that book is written by Mark Douglas. Let me drop that link in the chat for you. What this guy talks about and was very helpful for me, he talks all about the psychology of trading, all the pitfalls, all the gotchas, all the stupid patterns that humans do, greed, fear, how you can wrap your arms around that and how you can fix bad behaviors. Really useful book. I keep it by my side almost daily because as long as I've been doing it, I still fall in these traps. You'll experience it. You'll understand when you start to do this. It's very difficult to overcome these things and just that in the very near future.
Okay.
So, any questions on anything I covered so far?
No, I think I'm following along pretty well, getting the books queued up.
Okay,
And
cool.
so these are things like what how should I tackle these? Like just
So
have them in the library as we go, or start on one, or what?
you can add them as you start to do stuff, like when you start to goof around with using a trading simulator and chart patterns and things like that. You can acquire the book at that time, or you can get them all in advance if you're curious and you just want to look through them and thumb through them. I just keep them on a shelf next to me, and if something comes up where I don't already know the answer and I go, oh, it's probably in this book, that's the way that I use them. Okay. They're
Okay.
just great reference books for me. The next thing I want to talk about is probability and risk because I never used to do it until the very end of training somebody, but I'm going to flip the script here and talk about it at the very beginning because I would say 90% of your success depends on whether or not you understand this concept well. Okay. All you need is a tiny edge in trading to be profitable and make money. Lots of people don't even bother to learn about this and then
Hmm.
just immediately dive in, think they feel the trade is going to be right. I hate when I hear people say that. Proceed to then lose all their money. Okay. So I created this little spreadsheet to see if I could explain it. All right. So that the whole thing fits in the page. All right. Perfect. Okay. So risk reward. Here's how this works. Like I said, you could be profitable with as little as a 1% edge. The one thing you want to strive for in trading is to figure out your edge. Okay. Now, as part of going through this process with me, I will make my edge available to you for free. You can use it as a learning tool or whatever you want to do. I let Dave have it because he went through this course just like you. What I would advise you to do is, as you learn all this stuff, craft your own system with all these basic things, figure out what your edge is personally. I've found that people who try to just copy me are moderately successful, but the problem that they end up with is they don't understand my edge. They're just copying me. You know what I mean? So if I got hit by a
Yeah.
bus, they won't be able to move forward. Whereas if you take what I teach you and apply it and design your own thing,
Abstracted and
exactly, exactly. Then that I think is the key to success because you need to understand why you're making the decisions that you're making. You need to be able to do that in your sleep. If you don't understand that, I can guarantee you're going to fail because you're just going to be mashing buttons because a bell rang and it's not going to work all the time. And then you're going to get frustrated because it didn't work all the time. So what I'm showing you here, I'll just go through the different columns one by one. Risk and reward. You'll hear this bantered about the industry. I have a one-to-one risk reward. I always work with a one-to-one. So that's basically a 50-50 coin flip. The only thing that's going to make it lean in my direction is my edge. If I have a 1% edge on a coin flip, meaning that something that I do allows me to win 1% more of the time than I lose, and I risk $1 per trade, my profit or loss is going to be $1. So if I took 100 trades with a 1-to-1, 50-50 coin flip with a total risk of $100 because I took 100 trades of $1. At the end of that, I'm going to be up a buck. Does that make sense? It takes a little to sink in.
Yeah. So each trade is $1, you're saying.
Correct.
So there's a 50% chance you'll make another dollar and have two, or there's a 50% chance you'll lose that dollar, have zero.
Correct.
Right.
If I had no edge, you would end up with even.
$100 at the end.
But since I have a 1% edge, then I should, using the laws of probability, the laws of large numbers, after a large number of trades, you're going to be up. Okay. You're going to be in a profitable position.
Well,
whoops. Can I make that zero? Zero. Come on, just make it zero.
You can.
At the end of 100 coin flips. I should have been right 50 times and wrong 50 times.
But I think that in the right situations, every time, so the 50 times you get it right, you're doubling your money on that bet from $1 to $2. And that's how you get back.
Then you're going to lose that $50 on the other side of the coin flip.
That's how you come out even, is that if you've made up for your losses by replacing all the dollars half the time. Right. Does that mean in that case that
Are you an active trader looking to elevate your trading skills? We invite you to join the Trade Faction, a community where you can witness trades called out live. To connect with fellow traders and gain real-time insights, simply click the link in the description or scan the QR code to join our free Slack channel. This is a great opportunity to enhance your trading strategies and stay ahead of the market. Also, don't forget to download our new Forex AI Sage app in the Apple App Store to use the latest in agentic AI to help you trade. So what are you waiting for? Click that link or scan the QR code now and download the app today.
on the trades when I win, it's not that I have to double my money in order for this to work out?
You don't. You just need to win more than you lose. It's that simple.
Well, but
when you win, you have to be making more money when you win than you're losing when you lose.
yeah, exactly.
Does that make sense? And that's where the edge comes in. So if I have a 1% edge, I'm going to make $1 over 100 trades. So that I might make a dime on one trade. I might make 3 cents on another trade. I might make 7 cents on another trade. But once I get to all done with all 100 trades, I should theoretically be up $1.
Yeah.
Okay.
Yeah.
Don't worry if it's not sinking in at first. This is really hard for people to get. It was hard for me to get. So the whole kit and caboodle about this thing is just understanding that you need an edge to be profitable.
Yep.
The interesting thing about the risk reward model that people struggle with is this is not linear. Your line is not going to go up at a 45-degree angle from the axis. It's going to go up and it's going to look like this. It's not going to look like this. People will struggle with that because the worst thing that could happen to you, and I always tell new traders this, is you start trading and you have an instant streak because then you think you found the holy grail and you continue to take more risk than you should because you become overly confident. And then you will finally inevitably hit that patch of losses. You may have 3, 4, 5 wins in a row, be way up on your account, and then end up with an 11-row streak of losses that almost wipes you completely out. So now we're getting into the psychology thing. That will destroy your psychology, right? Your attitude towards it. And then when you finally get to that next trade that's going to put you back on the trajectory up, you might not take that trade because you've been so mentally demolished, you can't hit the button again. You know what I mean? Just let this stew. This is a concept that's hard to understand, but you need to get it eventually.
Yeah, I'm with you.
It's tough. So that I wanted to show you that first so you understood what was going on with that. So what else did I want to cover here? Let me just spend a second showing you my thing here. So what I do in my own personal system, this is my charts don't look like anybody's charts. And that's because just the way I designed it, right? So most people have candlestick charts on there. They have a chart. Let me bring this up. That looks like Newbie template. There we go.
What platform am I looking at here?
You're looking at
TradingView.
TradingView is a web-based charting package with a lot of really cool integrations in it. It has a library of indicators here for technical analysis, a whole crap load of those. It has social media. If you want to chat with a bunch of idiots, it's over here on the right. It has the ability to set alerts. I have a bunch of alerts for my system here on the right, which is basically Pavlov's dog. Bell rings, you salivate. Oh, I'm going to make money or I'm going to lose money thing. It has the ability to monitor the news in real time over here on the right. And we'll talk about all this when we get into the aspects of trading. The reason I really like it, and this is actually good that you asked because it was part of my journey. I started out trading with Schwab. Then I moved to a company called Thinkorswim when they were just a little acquired by, it ruined them and made all those guys millionaires. And then they didn't do another release for a decade. They just milked that thing for every penny that they could. And then I moved from that to TradingView. TradingView, I don't know where they're out of. I don't know anybody at the company, but web-based charting package, integrated indicators, integrated alerts. They charge like a subscription price, but you can start out for free. It's just limited. As you want more features, you can pay for more features, right? And you can make that decision yourself as you grow as a trader, but you'll start out with a free account. So right now, this is what you would look at a typical chart, right? These are candlesticks. You have a particular candle right here. So you have the high. Can you see that red dot?
Yeah.
Okay. So you have the high, the low, the open, and the close. I'm giving you a little crash course on reading candles. If the candle is empty, the open was at the bottom and closed at the top. If the candle is filled, the open was at the top and closed at the bottom. So that's the closing price right here. That's the opening price. This is the high. This is the low. This is what came out of that Japanese rice market way back in the 12th century or whatever the hell it was.
Yeah.
If the candle is empty, it means that the price opened here where my little finger is pointing.
At the bottom.
And at the end of whatever your period of time is, I'm on a 15-minute chart, it closed here. And then the wicks of the candle, the high and the low price. So the high price is here, the low price is here. That's how you read a candlestick chart. That's what I'm going to teach you in this because this is where everybody has to start. This down here at the bottom is volume. This is a very important indicator. I monitor volume pretty heavily. Volume just measures participation in the marketplace. When there's no volume, there's what they call no liquidity, which means it's not going to move a lot and it's going to be harder to get in and out of trades. And we'll cover all that when I get down to the nitty-gritties of trading. But I just wanted you to see what a normal chart looks like so that when I show you my chart, you'll see how different it is. I'm going to give you a brief overview of my system. My system is based on a lot of the basic things like which way is the trend going, how strong is the trend, is the instrument overbought, meaning that it's really been going to the upside and we're starting to run out of gas, or is it oversold, which is prices have been crashing? Are we starting to hit a bottom?
Yep.
Thing. So that's what all this is down here. This is my basic indicator. I use what's called a scalping strategy. So I am looking for anywhere from 3 to 10 in Forex. They call it pips, which is the smallest increment of movement in an instrument. 3 to 10 pips on every trade with a 1-to-1 risk reward ratio. Okay. And then I will teach you later about stop losses and how to protect yourself if things go wonky and wrong. Okay. It uses all of the basic things that I'm going to teach you about trading, which is trend and support and resistance. So basic concept. When you're looking at price, it can only do 3 things. It can go up, it can go sideways, or it can go down. That's all you need to know about price, okay? So the way my system works is it's always telling me what that is. So when this is all blue, price is going down. When this is all green, price is going up. Are you with me so far?
Yep.
We're going to do deep dive on this, but I just wanted you to understand basic concepts. So if I go back to the other chart, this is sideways.
Yep.
This is down. We're going sideways again. This is up.
Yep.
This is down. Got it? And you'll notice volume picks up when price moves. When the candles are really big, that means the price is accelerating to the downside. I'm going to teach you this, okay? But I just wanted to show you my system to contrast with it, okay? You are going to build your whole system on these concepts, okay? But once you master that, you may want to go down the road that I went down, okay? So here's what's different about mine. These are histograms that are showing me the direction of trend. And like I said, this is a downtrend. This is an uptrend. Then I have all these little indicators on here. What these indicators are showing me is when things are oversold, right? Or overbought. Prices have been going up to the upside. I'm starting to run out of gas. So if I zoom in on this just a little bit, this area right here, this little blue dot tells me that prices have been going to the upside for quite a while and are starting to run out of gas. And then you see right after that happens, it takes this little dip. That's an opportunity to make money. Same thing with if I just go forward a little bit here and zoom in on this area. All right, so here prices were moving to the downside at an accelerated pace and then hit a peak, oversold, and then pull back up a little bit. That's an opportunity to make money. Same thing, opportunity to make money. So that's what my system does, and that's how I use my system. There are different derivations of this movement, right? So one of the things that I come up with is something I call a bounce. This is a bounce right here. It's this big orange triangle. So what that is, prices was moving hard to the upside and then ran out of gas. See the little white area? It's run out of gas and then resumes the move in that direction. So I call that a bounce. Okay. So that's an opportunity to make money. So all my system does is it automates the visualization of the opportunities to make money. The other thing that's important, these little squares, these are when the largest markets in the world overlap. So this is the Sydney-Tokyo overlap. That happens from 7 p.m. at night until, it happens until about 1:30, but I quit trading at about 10:30 or 11 because I'm tired, right?
This is a chart of the whole day.
This is a chart of several days, actually, in 15-minute increments.
Gotcha.
So in the morning, like this morning, this is the London-New York overlap. So London is just finishing up the trading day. New York just opened on the East Coast. The reason that you want to trade during those times is because that's when the most volume is going to be in the market, and that's when the most humans are going to be in the market, which is also very important because computers are trading outside of these times. This is all computers. Okay, this is all computers. And they do what I call are playing Pong. They're programmed to buy and sell to each other. And if you try to trade during those times, it's difficult. It's really easy to get chewed up and lose all your money because it's literally just doing this shit. Okay?
Yeah.
Going back and forth like that. So what my system does is it makes it easy to visualize whether price is doing this or this. I call it the rubber band theory. If you think of a piece of board with a nail on it and a rubber band on it, price gets pulled in one direction or another. The rubber band gets pulled really hard in one direction or the other, but it will always regress back to the mean. You'll hear that term a lot, regression back to the mean. Price is here, the rubber band gets pulled down to here, and then it snaps back to the mean. So all my system does is it allows me to visualize that very easily. Because when I learned, I used all the standard classic indicators like you are going to learn how to use. And I would see all this stuff, but it was like too much information. Does that make sense? It's like information overload. And it all happens in a split second. So it's really hard to make a decision on what you need to do this way. Not only is it keeping track of all that information for me automatically, but it's analyzing it for me in real time. This is where the AI part comes in. Remember, I told you it's looking for patterns. Well, I have my own models that are helping to visualize all this information, but now I've figured out how to tie them to the big boy models from OpenAI and all that kind of stuff. So as price is moving, I'm capturing a bunch of data. And what I can then do is I can query the larger models and say, hey, here's a bunch of data. Would it be smarter to trade with the trend on this signal at this given point in time or trade counter trend? So if you look at these, it's intuitive. This little signal here is what I call a trend breakout. For all these signals, you would trade counter trend. So even though the trend is going down, what this is showing is these little temporary blips down to the downside that keep snapping back to the mean. So those are all trading opportunities as well. So hopefully I didn't confuse you too much here.
No, this all makes
But
sense.
you see how many different opportunities in a day there are to make money?
Mm-hmm.
One of the things that's really funny about people is, oh, I screwed up that trade. I didn't do it right, or I made the wrong call. And I'm like, dude, there's another bus in 5 minutes. Don't even worry about it. Just pay attention. This little white arrow here, that's what's called a pivot signal. And what the pivot measures is when the trend switches from one way to the other. That's also an opportunity to make money.
So it seems like the game is to develop a system. This is the edge that you're talking about.
Right?
For evaluating the trend, that is to
Right.
say the moving average, the mean, and then the direction and intensity of the rubber band direction. So you got the moving average, and then you're trying to evaluate where are we at in the tension, standard deviation of the rubber band so that we know what's about to flip where the make money opportunities are.
Correct. Perfect. You're catching on to this shit faster than anybody I've ever taught. The only thing that you left out of that I
Okay.
need you to understand, it's not going to work 100% of the time. And
Right.
that's what's going to crush you. Okay. You're going to go, oh, all these planets lined up. That's why I call it syzygy. All the planets lined up, but it didn't work. So what you have to do in that particular situation is you have to have, and what do they call it? Plan B, the exit strategy, right? And that's what I will teach you on how, what would be called a stop loss. Okay. So I could visually show you. So if this signal fired right here, I would be taking a short position, right? But what I want to do is I want to protect myself should it go in the wrong direction that I'm expecting it to go. All right. So what I would do is I would place a short stop right here. And this is your own personal risk management strategy, right? You have to decide how much you're willing to lose on a trade if you're wrong. Okay. But what that does is it preserves your capital. And because there are so many opportunities to make money here, you got to just let that happen, let it go, and move on to the next one. You got to get numb. I equate it to bedside manner for doctors. You're going to treat a bunch of people, a bunch of them are going to die. You can't let it get to your head. You just got to focus on the ones that you made better and that lived a productive life.
So it's more, I think this fits in with my disposition too. So hopefully I'll continue to be a good student. Focus less, be non-attached to the outcome, but be really focused on the process and what you're learning.
Exactly. You got to be a robot. You
And
got to trust the plan. You got to make sure that whatever you have such confidence in what you designed, that you are able to just blindly follow it. And
Right.
knowing that you have a parachute if you need a parachute.
and on that point, so why, yeah, looking at this chart and about where do we set the stop loss? So in this situation where we're doing this every day,
Right.
and there's all this overall market volatility happening, so that there's one option where you set the stop loss here, a couple percentage points above where it's starting so that you cover the continued trend up and then you won't stop out and then you can ride the thing down. But if there's all this volatility, why not just let that ride?
That's
And
called
just-
investing.
Yeah, but so if there's all this volatility, you have some that are going to break through. But the idea of looking at this chart is going to be at some point, it's going to go below that.
Right.
So why couldn't you have multiple positions? Like you're just always trying to place bets on the opportunities to go down. And so even if it goes up for a while and you're wrong, you can wait 3 days, say, until it comes down, and then
You could, but that's
just-
literally called investing. Okay.
I see.
So what I'm trying to teach you, you're hopefully going to learn is this is scalping. You're trying to get little tiny chunks of profit over a specific period of time, which is from 8 o'clock in the morning until about 10:30 or 11 every day. So I'm just going through the chart to just show you some of the things that might get you. Here, this is good because this is a failure. So here's a bounce to the upside. I would have gone long here, but then notice something happened right here, a big spike in price. Let me zoom in on that. So I would have bought here, and what you're saying is if I would have just stayed in this and just kept going, eventually it recovered and it went back. Isn't that what you're saying? But that's a completely different way of trading.
It's blending the two things, and it's dangerous
blending
to
the
blend
two
these
things. They
things.
call that swing trading, okay, where you
Okay.
might hold a position a couple of weeks. This also is a decision that you want to make, which is how much do you want to do this, all right? Because part of this is your personality and how much time you have in your life. So for me, I can focus 2 hours a day, and I'm happy to sit here and make singles all day long for that 2 hours a day. It's easy for me to make a couple grand a day, which is more than most people make in their jobs. My fund, which trades in a longer time frame, trades more like what you're discussing, which is I look for the same stuff, but I'm looking at it on a much higher time frame, like a daily chart. So these trends last longer. This is February 25th, where the pivot signal fires, and it's here we're to July, and it's still going up.
Yeah.
That's more like investing than anything else. People will swing trade on an hourly time frame, maybe. That seems to be a popular time frame for people to do.
Why isn't the fund on shorter scalping?
Because I get a lot of conservative investors who get really nervous if I speculate like that very frequently.
No. So
They
for some
feel
reason,
more comfortable with a longer time period because when I go back to show them the results of the fund, it's like they see big, long trends that I caught, and that makes them feel safe. If I go and I show them a 5-minute chart, they'd all probably have a heart attack. It's just like that's me just being, I guess, a good salesman and knowing what my customer wants. Right.
Yeah.
They don't want risk. They want dependability, reliability, etc. I invest that in a longer time frame.
I see. And so then do you spend less time on that? Or
I just need to look at that maybe once a week or once every 2 weeks. It's mostly friends and family kind of stuff. More family now, less friends because I've lost some friends, if that makes sense. I don't like to do that. If I know the individual, I usually shy away from letting them put their money in the fund. I've had people refer people I don't know who've put some cash in it. I prefer that better because they're more objective about it. Okay, here's your performance. Okay, that looks decent. That's that. Okay. We're done with an hour, so if you want to break here, I'll give you some time to marinate on all this stuff.
Sure. Yeah.
And then next week, we can start to cover, I'm going to talk about the different aggregators and psychology and developing your style. We touched a little bit on this stuff, but we'll go into that in more detail next week. Okay.
And then how many weeks we got, you think, on the total curriculum, just to wrap my head around it?
1, 2, this might be 3, 4, 5. 5, maybe 6.
Sweet.
And you should be ready to charge in there.
All right. I already ordered the books.
All right, cool. Cool.
Which one should I start if I had to pick? Which one would you recommend to start with?
The candlestick one is interesting. I might start with that one because if you get a good fundamental understanding of how price is visually represented on a chart, that's going to be really useful knowledge for you.
Once I get started.
The other two, the psychology one might be of interest to you because of your background. The technical analysis is as needed. You might stumble upon, what if I use regression analysis or support and resistance? It's all in that book, so you can look it up. Or if you downloaded my app, you can ask my agent a question and it'll answer it for you. And you can go in the app and go into the part with the agent and say, you're using a trend following system and this is going on. What do you think? What should I do? Because that's what I'm doing now with my system linked to the large language models is going, here, there's a bunch of data. Look at it. What's your perspective? What do you think? And it's saying this thing is more successful. I'll just show you something real quick here. So
how does your system connect to this trade viewer?
there's a couple of components to the software. There's a language called PineScript, which is it's another programming language. And virtually all of the graphical stuff is, and some of the mathematical computations are done with PineScript. You can use hooks to other libraries of things and bring in additional functionality into PineScript. So that additional library is my own personal models. Okay. And then the third piece of it now that I just figured out is you can ask it to go to the big boy large language models and do stuff with them too. I just wanted to show you something here. I have some tables that are hidden. I have tables that are hidden that are collecting information and giving me kind of calculations and results. This one here, this table here is looking at my 4 different types of signals. It gives me a recommendation in real time as it's studying what's going on with price, what direction to trade. And it's ranking the success rate of those trades here on the right. So right now,
is that like probability or like the probability of success?
It's a combination of probability and looking at actual hindsight results. It's looking back in time 100 bars or 500 bars or whatever and saying this guy was right the best out of all 4. Okay.
Oh, I see.
If I turn on the actual performance data, it throws a little of that data on here. This is going to get a lot bigger. For example, the pivot signal is right 73% of the time if you trade with the trend. It's wrong 35% of the time if you trade against the trend.
So a lot more than 1%.
Yeah, but I wanted to teach you that with just 1%. Because all you need, I know all kinds of people that are right 15, 20% of the time who make all kinds of money. So it's just, if you understand that concept, then you'll do well.
Sweet.
Okay?
All right. Thanks. This is great.
Good. I'm glad you like it. And we'll pick up where we need to go next week. All right?
Look forward to it. Thanks, Bill.
See you later. Have a good weekend.